Hello ladies and gentlemen, welcome to today's webinar. I'm Joseph Novichkov, Senior Trading Manager with GDM. One thing we actually covered so far, which is extremely important, is connected to the dollar itself. So ladies and gentlemen, the dollar is, as we can see in all of these currency pairs, as we have been so far discussing. So the one thing that what I would like to remind first is about the correlation between currencies, because we're getting the USD as a base currency in all of these currency pairs that we spoke about, which today will be the USDJPY as a currency pair. Also is a currency pair that is used, the yen most accurately put, is used for carry trades. The particular strategy that we spoke about in our first session when we spoke about the euro dollar. In today's session, we will cover the final currency pair for our webinars, and next week we will talk about commodities, and mostly major commodities like gold and oil, and still those commodities are denominated in US dollars. They're not traded versus other currency pairs, currencies like the euro or the GBP or the Singaporean dollar, if you wish, or any currency in the world. However, the major impact and the highest volatility we get on the USD, because it's pretty much mostly traded by traders out there. So let's start with the most basic thing, as we usually do when we talk currency pairs, and yet most important of among the lessons that we spoke of every day. What does USDJPY or dollar yen means? Okay, when we say USDJPY, this currency pair formula can be translated into a sentence from something like this: number of Japanese yen a trader will require to spend to be able to buy $1 US. This, of course, pretty much also applies for other currency pairs. However, those that we so far actually took a look at were not the first currency, but the second one, as speaking of USD. Therefore, the trader would need the amount of the first currency to buy the second. Trading the USDJPY currency pair in the trader's circle is also known as trading the economies both together, especially when we're talking about United States and Japan. Why? The answer is because of the large amount of carry trades by institutions, hedge funds, and investors. Of course, I would not try to undermine the opinion of other experts that have made some critical observations from, let's say, the Bank of International Settlement Survey, which releases a report as per which the USDJPY currency pair, with 17% of total daily volume, is considered to be the second highest traded currency pair among the major pairs. The value of the USDJPY pair is, of course, quoted in the following manner: $1 equals some number of Japanese yen. Suppose, of course, this pair happens to be preceded or let's say priced at, as we see right now, at a level of 120. It is translated for as an investor or a trader will have to sell out 120 yen if the individual wants to purchase $1. Okay, those are the things that most of us are fully aware of. However, we had to start from somewhere. So now we can talk a little bit more of the individual economies. Further into the session, ladies and gentlemen, we will divide the dollar and the JPY as individual currencies and take under consideration their own overview or their own economy, and of course to establish a certain profile of which we categorize the significant fundamental details that are affecting any of those currency pairs, currencies, individuals. So as we already covered the US dollar, it will be much easier and much faster for us to go ahead and cover only the JPY itself. So first of all, we have to take the USDJPY currency pair as an overview, which means that the exchange rate of the aforementioned currency pair, as I've explained in the beginning, is the price of $1 known as the base currency in relation to the Japanese yen, known, of course, as the quote currency. Now, if traders are to analyze or make a certain effort to do any kind of expertise over the US dollar and how much it will appreciate against the yen, then of course the quote in front of you, sell price of 120.69 and buy price of 120.70, will look like. Extremely important factor, more important and much more significant to the currency pair as a USDJPY, plays the weekly published report concerning jobless claims from the US, and of course the non-farm payrolls. This is something every trader must know in order to be protected from sudden moves, and of course to try by all means necessary to protect his own portfolio. Why do I mean that the jobless claims on a weekly basis is much more important to the USDJPY currency pair than any other currency pair out there, also, you know, with the US dollar in it? Very simply put, because the time that we get the announcement of the weekly jobless claims, then we are at the beginning of the US market. The Asian markets are closed, so half of the world is not trading the market at this stage, especially this currency pair. That is why the significance of the jobless report on a weekly basis brings larger volatility, and of course, judging by the numbers, we can also establish a direction for the next few hours or until the Asian market opens, or if there is anything that is expected to be announced during the Asian session itself, like any kind of Japanese economic data, which might, should I say, by some way counterattack the jobless report prior. To go a little bit deeper, we need to understand the Japanese yen. And that means that we have to know every single detail for it. The yen, ladies and gentlemen, is the legally circulated Japanese currency. Third mostly widely traded, following the currencies of the United States, of course, Europe, like the dollar, the euro, of course, the sterling as well. So there are several important features that are attached to the yen itself. As we mentioned, it's a third highest traded currency. It's a reserve currency as well, and it's amongst the stronger and more stable lot of currencies in the forex trading area. Besides that, Japan also happens to be common traded when it comes to short side of what is technically known as carry trades. Now, I will underline one more time the carry trades sentence, because it is very important. One more time. I'm repeating this probably every time, more than once at a session, but understanding how the carry trade system works will get you closer to understand, let's say, for a long-term period, towards what direction any currency is going. It doesn't matter if we're talking about the USD, the euro versus the dollar, or the USD versus the JPY. Both currencies, the euro and the yen, are used as carry trade. I'm not going to repeat the strategy itself. For those that are interested in finding out a little bit more in details of what it really is, and if you think that the explanation I gave at the first session when we spoke euro-dollar was a little too complicated, be my guest, send me an email, or to the support department. You can always ask for me. Just whether leave your telephone number or an email if you are not trading with us, so I can get in touch with you back. Or if you're already trading with us, it will be very easy to find you, and most probably we're already in contact. So, Japan as an economy is famous for what? For quite the country when it comes to fluctuations and movements in prices that, of course, take place in the oil segment, of course, because of the fact that the country uses significant amount of oil and hardly has any of its own resources, almost neglectable that it can call not bought or its own. So basically, it has no oil industry at all. We can just demise it at this particular level because it is pretty much an importer of any particular oils, as whether it's oil products or oil itself. What makes Japan's economy a strong combination is that it's, one more time, the third largest market in the global rank. And of course, the trade surplus that stands at a second position. So that's why when we have a trade balance or any kind of balance sheet coming out in the economic calendar, it is a very significant piece of information for the yen itself. Then what makes the economy shake in present days, and when we get weekly job reports, you know, since it is indicative of the monthly non-farm payrolls, this takes a large impact on the currency pair itself. So let's get back to the topic of the yen. After explaining a few general details, by giving you some information, ladies and gentlemen, today about the place we're actually listing the yen, the economy of Japan as well. It is an integral part to understand the Japanese economy before understanding the yen as a currency. So to understand the Japanese yen, traders will first have to understand the economy of the country. As an inspired, an inspired trader, the first thing you have to know is that Japan as a country is a very huge exporter. Some, of course, well-known or worldwide known Japanese exports like autos, of course, brands like Toyota, Honda, Nissan, if you wish. And of course, not to forget a household name across the world, Sony Electronics. As Japan is a big time exporter, its overall stock market is, of course, always looks bright and also manages to perform extremely well in the areas where Japanese companies are selling lots of cars, electronics, any kind of devices. On the other hand, reverse reflection is immediately noticeable when a sale of these companies hit the bottom of these goods and services. The rate of such items, of course, help to identify how much exporters manage to put on the market for sale on, of course, regular day-to-day basis. But the cost aspect is slightly relative, as it's usually how a foreign recognizes the costs themselves. So the majority, the majority of all this at the end of the day reflects on rates of exchange, or the difference between the US dollar and the yen itself, which is our exchange rate. JPY looks priced lower when compared to a trader's own currency, country's currency, okay? Which means that the Japanese items will have a tendency to give an impression of being low cost because the trader's home currency will help him to favorably buying of the Japanese merchandise. On the other hand, if the yen comes across as a strong currency, then those same goods appear to be much more dear or much more expensive. As a foreign buyer, the trader is likely to buy less under such circumstances. I suppose that makes sense. The explanation so far will help us understand clearly as to why the Japanese yen and the Nikkei stock index 225, its shares are unfavorable or a negative correlation with each other. This is obvious. When the Japanese stocks drop in value, the traders witness the yen rising against the dollar and vice versa. So this is one of the reasons when dispatching those trading recommendations on a daily basis, when I'm adding into the analysis the Nikkei 225 as an index, its value, but most importantly, not the price itself, but the change in percentage. Now, why is that? To know how much in the future, for example, the yen will appreciate versus the dollar, you need to firstly know how many percents, of course, from the value of the Nikkei 225, you can derive at the fact that you can still have more expensive yen versus the dollar. So the further it drops, the higher the yen goes. Let's say recently we saw the Nikkei comes at 1.9% gain on the day. When the market opened on the next day for European trade, the yen dropped versus the dollar, but not because the dollar was stronger. And that, of course, comes not only from the index itself, but also from the day-to-day base data that we're receiving. If a trader is trading the dollar versus the yen, ladies and gentlemen, he uses as the normal tickers, the USDJPY, as well as if you are trading the euro versus the yen, or the Aussie versus the yen, or any other, you are comparing the economies by one and the same criteria. USD and JPY currency pair profile. From what we know so far, we will start grading the importance of all of this mentioned. The first thing, the USDJPY is a popular currency pair for all traders. Actually, third most traded among majors. The USDJPY comprises the base currency, which is the US dollar, and of course the quoted currency is the Japanese yen. There are many reasons, ladies and gentlemen, because of which the exchange rate of this pair can or is likely to fluctuate. Some major reasons for that are: the first one, interest rate differential that may exist between the Federal Reserve and the Bank of Japan. And there we go back to our carry trades, because the system profits from the difference between interest rates. Second, government intervention to strengthen the yen may result in the pair taking a hit, which means because the US dollar is the first currency, the JPY is the second one, it should fall, because the yen is actually strengthening and the dollar is falling. And you will actually pay less yen for $1, meaning it's stronger. Other characteristics associated with the pair are also the average spreads, which is needs to be very tight, resting between 2 and let's say 4 pips, something like that. As you can see here, it's about 2-3 pips, 5 pips at the most in the most volatile times. So on a floating spread between 2, 4, and 5 pips is pretty much the best spread which any broker can actually give you. And the trading style, which is mostly recommended for this pair, is like the previous strategies that we mentioned when we spoke GBP USD. This would be the day trading type or the swing trading. Now, why am I saying the day or daily trading or swing trading? It is imperative to notice that the yen itself is within a very tight range of about 250 pips, which leaves little room for a direction for the past 52 days. Before that, it was also confined within a different range of 370 pips, something like that. Before that, the range was pretty much the same. So between 250 and 350 pips of range, the best strategy you can pick would be swing trading. So you can take on a larger scale, take the all-time highs and all-time lows, decide where your swing highs and swing lows are so you can identify the particular range, draw support and resistance level, and you can trade by selling on the highest point and buying on the lowest. This, of course, is also another thing that you can use would be the relative strength index. You can see that when it hits at the end of the range, it strictly touches the 30 oversold conditions before it bounces back up. So until the volatility reaches its highest point on the relative strength index on the 70 level, we have a little bit of upside, which will pretty much come somewhere here, if it comes at all, before it reverses. And you can switch to smaller time frames, like let's say 15-minute chart, 30-minute chart. You can still see some positive and negative trends in the short period of time, which you can also trade accordingly. And those are two brief examples, ladies and gentlemen, to to give you as to the recommended, or let's say less risky strategies that you can accompany the currency pair at hand. While, of course, trading the aforementioned pair, we need also to apply technical analysis along with analyzing and scrutinizing fundamental news from the Asian zone and from North America, or more specifically, US, to help every trader to make better and more informed decisions to trade the USDJPY pair. It has, of course, been observed that the news and even breakouts are more often true and sustained once than rumors. What I'm trying to say here is that in most cases, the market is technically pricing along with the news releases. Let's have a few brief looks at the characteristics of the dollar and the yen as an individual currencies, but as we said, the dollar, we already covered it. There is nothing much more to say about that, as we spoke a lot about it. And the significant fundamentals that we have on day-to-day basis can affect the yen and the exchange rate, of course, between the dollar and the yen. So taking the yen as a single currency, we need to treat it as, let's say, we can, or it's already treated, let's say, as a major currency pair, which is bought and sold very aggressively in a big number in the global currency trading market. Of course, floating rate applies to Japanese yen, which goes to the suggested market force, which is compared to demand and supply to determine the value of the JPY. So, speaking in a bit more details, Japan's main area of concentration in export markets, or let's say countries like the United States, which has roughly about 23-24% share, the European Union, which has about 14 to 15% share, South Korea at let's say a little less than 8%, Taiwan, of course, at almost 7%, and of course more lower percentage of a share in China, which goes to about 5 to 6%, depending on the good year, which of course the 14% for China goes to the second economy in China, which is Hong Kong. So you see, that's why, you know, in China we have two major indices, you know, the Hang Seng in Hong Kong and the Shanghai Composite. So not only the yuan as a Chinese-based currency can be, you know, evaluated from the Hang Seng, but mostly from the Shanghai Composite. This, what we mentioned so far, goes to prove that exports like imports is what most of Japanese economy is made of. And of course, these include transportation equipment, motor vehicles, and electronics. The imports, however, include food, machinery, fossil fuels, which are comprised of about 20 to 22% from China, 12% from the United States, approximately, let's say, about 10 to 11% from the European Union. A much smaller share, about 6%, goes to the Saudi Arabia, and of course, United Arab Emirates, about 5% of market share. So then that means that the JPY is receptive to volatility in spikes in exchange rate for a simple reason that Japan is a country that happens to be a big exporter of finished merchandise and an enormous importer of food and fossil fuels. So another example I can give you here when talking about the imports from you know, on oil to Japan, if they fall, that means the economy is stalling. Less oil is consumed, therefore oil price will also go down because there is too much on the market and no demand whatsoever. Of course, oil consumption and imports goes for China if we have to compare that for the second largest economy. Most of other regions, let's say Saudi Arabia, they've got their own merchandise over there, their own energy sector. In Europe, here in the Union, there is another. There are different suppliers here. So basically, if I have to compare different countries by comparing the imports of oil and oil products, that means that so far Japan is one of the largest importers of fossil fuel. Japan is rather small and of course also short on natural resources, as we mentioned. As a result, it imports not only from the energy sector but other commodities, including metals. The yen is known for yielding a very low interest rate because of its low domestic growth, correct? That means, ladies and gentlemen, that when the last report, which was very significant and was 19% of total trading that happened in the forex market, Japanese yen was one of the components of the pair, either as base currency or as quoted currency, even dating back to 2010. 19%, of course, is a reasonably fair share, and it's of course because of its of this fact that dollar-yen currency pair was the second most volatile and aggressively bought and sold currency pair, comparing to 14% of entire dealings during the year. One thing that it's also well known that Japan comprises big part of global economic system, where credit for majority of Japan's growth goes to its exports. Because of this, the Japanese government had implemented a zero interest rate fiscal guiding, which is a principle that could help yen depreciate. So if I have to remember, in many years ago, we had a quotation of 98 yen per dollar. So you see, right now we have 120. Even it was up here to 125. 125, 126 even though, very recently. That means that the work that the Japanese government is doing so far is working in line with their expectations. Basically, not so well, because they would like to reach about 2% annual growth, or let's say inflation, by 2016, which I believe they might fall short. That's why we're expecting probably some more quantitative easing, or the so-called bond buying program, which is trillions of yen. I'm not even going to mention how much. It's so much money the government is spending to buy back its own bonds. Rather than that, I would like to focus on what exactly impacts the currency pair itself, because that is the key concern of today's session before we actually call it a day and even call it a week. The USDJPY currency pair, ladies and gentlemen, one more time, the third mostly traded currency pair, forming about 14% of the total number of trades that are happening on any platform. So for a few years, the USDJPY, and as it is right now, it's mostly influenced by two things: the carry trade and BOJ, which is the Bank of Japan quantitative easing program. American exchange rate, however, US exchange rates are managed and controlled with the aid of the Federal Reserve that have for several years remained high compared to the Japanese rate, which is at current level 0. The US interest rate is 25 basis points, or 0.25%. As a result, traders have sold the yen in a big way to buy the American dollar, which was working out to be more profitable proposition. The USDJPY trader is of course advised to take note of the fact that as a result of the crisis, the disparity in interest rate has shrunk significantly. Plus, of course, the carry trades are also not up to date. And with carry traders being, in a hurry to unwind trades, the value of yen has gone slightly up, which means the currency pair very recently went to 116 yen per dollar. So that's quite stronger. Of course, if you have to take a more historical view, 2012 here, I'm not going to scroll even back, is 74, 75 yen per dollar. So you see how expensive it was about 3-4 years ago, when traders started, should I say, mostly ended the unwinding of their carry trades before they started establishing new trades. And of course, the dollar went rather more expensive because of the expectation of interest rate increase. The first one since 2006. It's almost a decade since the last increase in US. One more time, let's have a brief glance of on the unwinding of these carry trades. Essentially, they indicate that traders are shifting to safer currency pairs, ladies and gentlemen, with an aim to protect themselves from suffering financial losses. Obviously, that's what we all do, right? We're measuring the risk, trying to pick the safest place to invest. And the rise in the value of the yen is hardly a good sign for Japanese economy, which is so exposed because of the exports, which are hesitant, of course, when it's time to convert their home currency to into Japanese yen in order to make payments for goods exported from Japan. As a result of this, economic growth takes a hit, and therefore we need the government to intervene as a last resort to start buying back their own bonds to devaluate the local currency. Traders which are new to the trading pair such as this should also take a note of what I will mention here. The pair, which is quoted at about 3 decimals, can also be found differently in different brokers. With us, we have 3 digits after the decimal. With some brokers, they could be 2. So if there are 2, let's say it will be a little more difficult to let's say, scalp the market, trade on a high volume when even the baby pip matters. But this is just a concept that you should just simply take as a consideration by trying to find out what kind of trader you are, whether you actually need 2 or 3 digits, but in most cases we have all 3, which means you can either care less about the third one or take it under serious consideration if you are a scalper trader and you're trading with large lot size, which means that every single tick matters. Other key concerns before we move forward, I will be very brief on these concerns because I would like to summarize on the trading the Japanese yen without any historical events. Simply it took us quite a bit of time to discuss all of that. The last time we lost a bit of a precious time, so today I will at the end focus and compare some more along with the Japanese interest rates, which is very crucial to any currency exchange rate. So while trading the USDJPY pair, there could be several factors within a nation that can significantly impact the currency exchange rate, and of course can question the relative importance of each of these currencies. Traders, of course, who are focusing on this particular pair in live environments, obviously, should be also aware of some of the key fundamentals besides government intervention in the exchange rate, which is perceived as, let's say, the last resort to business exports. Japan has, of course, frequently experienced natural calamities which alter the economic landscape, should I put it this way, almost always that it strikes. So the important thing traders should remember here is how earthquake or a tsunami led to a nuclear crisis can impact the economy itself, therefore the currency exchange rate as well. Inflation is another factor that should be a crucial concern for all forex traders focusing on the yen as a single pair, as a single currency, because let's say you live in Australia or in New Zealand, you have your own local currency. So if you're trading the USD versus the should I say the Aussie versus the US dollar, or the New Zealand dollar versus the US dollar, and then you want to trade the yen also versus the dollar, or the Australian dollar versus the yen, all of this depends on what is your local currency, whether you want to hedge your own risk, or one more time, it depends on the strategy itself. Interest rate is another key concept for all forex traders. The Japanese central bank has kept it low, 0, to stimulate economic growth. Low interest rate has attracted investors to take loans from Japan to be able to invest in other countries, which is known, one more time, as a carry trade practice. Observations, crucial perception is an important aspect as far as foreign currency traders are concerned. So to understand about how investors will see the currency itself, the local currency, the yen, and whether these investors or traders will perceive it as a stable or a safe currency, especially more so during times of political and economic instability, or not. This of course, supply of steam of money, rising cost of living, political standing, gross domestic product, balance of trade numbers, product prices. More so, if, of course, country relies on merchandise such as oil or metals or crop growth, let's say, from food supplies. Also, for its GDP, to some extent, as some of these issues that will impact favorably or adversely the rate exchange of any currency without exception, depending on combination, affect all the situations itself. As far as USDJPY Forex trading goes, let's say, one thing to note is that they're not based to either rise or they're not even based to rising or falling markets like shares in stocks, for example, which are certain, which are at certain extent only. You see, if you're also trading indices, this would be individual companies inside those indices which have larger market share, therefore more influential to the direction of the index as well. And of course the local currency's impact over it as well is a third factor. Traders also should understand that diversifying their own portfolio with USDJPY can reduce the volatility of the portfolio itself. Why is that? Risk and increase in the profit potential because of the local correlation exists between forex to stocks and bonds. So the things that you might be trading, like any kind of currency pair or an index, they have higher correlation because of the impact the currency has over these markets. But trading stocks and bonds, this is a different thing. Mainly company shares and their value per share acts as a significant impact over these rates. Also, another thing which we can mention about the currency pair USDJPY is that, of course, this pair gives the ability to the trader to profit in any economic environment. However, as traders trade this currency pair, they should also be aware of the risk related with USDJPY Forex trading. Why is that? Market risk is present when we talk about entering into USDJPY trades. This pair involves quick and quick profit and also probably quick loss. Therefore, the risk is higher. So trading the pair is carried out in small amounts, like lower lot size would be better. You should always keep your equity at least, let's say, not more than 5% risk when you're trading the yen. Because you will see that let me just get you here on the 4-hour chart. Now, from here to here, this is today, okay? 63 pips only. Not much of a move, but when you buy one lot, you will see that this will result in about $6,000 of profit or loss. Therefore, smaller amounts are more suitable for the pair. Let's take a look at the interest rate for the last time to summarize the most important things, because as we speak interest rates, it is the single and most important piece of information for any country to influence the currency. Reportedly, low interest rate and prime rate, for example, at which leading is happening in near future, like figures of, let's say, 0.5% or 50 basis points. This particular interest rate is too high to be risen, let's say, at once. It has to happen on installments, an average of 20 to 25 basis points. It is usually made on quarters, like 25 basis point increase for any government, in order to stabilize the economy by tapering the inflation itself. Even the favorable trade balance showing against the US these days, which of course happens to be Japan's largest business ally, that has been responsible to make the yen such a strong and robust world currency that it has been for the past several years. Of course, in the past 1 year, it got devaluated based on the intentions of the government, which so far is working, but they will probably need an additional year to reach their inflation goal, or to expand their quantitative easing program, which will result in a much more cheaper yen. As you can see, it is getting cheaper and cheaper as we speak. That is all about the pair, everything that we need to know. I hope today's webinar was thorough enough for you to understand, guys. If there is something else that you misheard, or let's say misunderstood by some reason, or you thought that I probably made a mistake with some explanation, please do correct me. I will very much appreciate that. Please remember that the webinars are not the only thing that I'm doing, and it's pretty much the end of the week. We're currently closing trades which we made during the week. Usually don't leave any trades over the weekend, so we can start freshly on Monday, and of course reevaluate what has happened throughout the week, so we can have the most important facts and figures to continue with our trading and profit making. It was a pleasure delivering this webinar to you. Next week on Wednesday we will talk gold, and on Friday we will speak about crude oil. Anything else that you would like to know, questions that you might have, forward them to our email address, webinar@gdmfx.com, or to our support department directly on our website, www.gdmfx.com. You will see our telephone numbers directly to the office here. If you need a fast connection to an account executive or a trading manager or anybody else from the firm, you're most welcome. Thank you very much for joining us. I'll see you next week. Bye-bye.